Peter, how critical is Iran to the global supply equation today? And if exports were to drop, what would be the impact on prices?
Well, good afternoon. Oh, good morning, Reema. Look, it's very, very complex in the sense if they were to shut the Strait of Hormuz, we all understand the impact that that could have. 30+% of crude of the global supply flowing through there. The impact is going to be felt very much in China and, of course, across the fabric of Asia. And whether that was going to be a short-term event or the US military would be able to keep those the strait open is the great unknown. So I think a war premium would be built in very quickly as far as price, and no one knows as far as duration.
And the contribution of Iran to the to the overall global supplies?
Well, it's certainly a major contributor, and we all understand as far as, OPEC barrels and so on, the impact is going to be one, it's going to certainly cause much concern naturally to the Iranian economy. Secondly, the consumers of that crude, who's going to fill the breach as far as, the likes of China and Asia. And the second and third orders of consequence that take on board from those decisions are greatly going to be, I think, felt across the supply chain.
All right. Hi, Peter. Good to see you. And as always, so what would you be building in terms of a Brent crude move? That was holding at around $63 to around $65 a barrel. It's moved to around $70 per barrel. Unsure what's going to happen next on the geopolitical front. But if you were to build up a couple of scenarios, if things escalate from here, where do you see Brent crude prices moving? And if in case, hopefully, the worst doesn't take place, then what's the range you're working with based on demand-supply dynamics on Brent crude prices?
Well, good to see you, Nigel. I think first off, let's assume that, and we've had a big move overnight. It's up the best part of $2.50. So it's been strongly bid up, and that's one of concerns as far as naturally price. And the other side of it, whether we're going to see a continuation leading into the back end of the week with, tonight in New York and of course, tomorrow. So there's the first part, the overall move to the upside. You could take a 75 out, considering where Brent is at the moment. It's been, it's the best part of nearly $71 a barrel. So I think that's got the potential to take a kick up from here. And then if we don't see any, issues and it seems to subside again, then I'm pretty sure that you'll see a few dollars wiped out of the market fairly quickly. But these are great unknowns, Nigel, and we have all been around this long enough to appreciate the dynamics of the energy market.
My question is not so much about oil, but the headlines affecting oil. What's your sense, Peter? Hi, morning. What do you make of all of it? You think, I'm just asking you as someone who's watched this, right, back and forth. Is this posturing, carrot and stick, and this is the stick? Do you think it'll come to it? What's your hunch? If I'm not asking for, this much barrels or whatever, but what's your hunch here? You think this will be a fight?
Yeah, Prashant, look, it's early in the conversation in the sense we're looking as far as any possibility of a strike, or I think there's a lot of water to flow under the bridge until that happens. Possibly they're saying, you could see some sort of military action, 50% probability or greater by April, but we're only in that third week of February. If Iran does threaten the closure, what is going to be the outcome as far as that's a Strait of Hormuz, of course? Where does the Trump administration, do they let them go forward with that, or do they restrict it? So there's the first part. The second part is where it rolls across the other complex and, of course, precious metals, and where does US dollar trade? And do we see an uptick as far as safety and US dollar has a rise? You could see it back at 99. Gold, I think, would probably take another step up, and silver as well. So across the commodity complex, it's going to be one word, and I think that's going to be volatility, and that's going to continue over the next matter of weeks leading into an outcome.
Oh, yeah, absolutely. And we'll see what really comes out of it. Now, we've completely stopped talking about the other one, right, which is Russia and Ukraine. And I think there were some comments from President Zelensky saying that I'm not sure the talks in Geneva have led to anything meaningful. So in terms of product spreads, what's your sense? Diesel, etc. I mean, they remain high? And where are we at?
Well, they do remain high, and as far as if you see any, and we understand as far as an outcome between Russia and President Zelensky, Ukraine situation. So there's no determinant yet as far as whether we're going to see a line drawn in the sand from a timeline perspective. I think it's just it's just work in progress, and where it hits as far as other components of the energy sector. So, we're very mindful as far as daily barrels. We understand there's a little bit of a glut in the market as far as production. So that's going to be a buffer leading into Q2 and where the impact's going to be as far as price. If you strip geopolitics out, then I'm sure you're going to see cheaper crude. But when you're dealing with geopolitics, that can quickly escalate things and escalate them quickly.
All right, Peter, thanks a lot for joining in, giving us an update with regard to the commodity markets. Also, mate, we were looking forward to playing you all in the T20 World Cup. Unfortunately, that will not take place, Peter, but I believe you're cheering Team India now.
Yes, Nigel. Well, I do cheer you on, and I'm sure you'll carry the cup again.
All right. Peter, sometimes doesn't work, mate. I mean, with regard, Team Australia has done well in the past, but you guys will miss out this time around. But glad to know that you're in our corner.
Thank you, Nigel.